Have you ever noticed that price perfectly reverses at numbers like 1.200, 1.300? So these are what are called round numbers. So according to the textbook, round numbers are psychological levels where big money places their orders. So these are orders like stop loss, take profit, pending orders. So therefore making this zone to have more traded volume. So each and every time the price approaches these levels, they tend to react due to the high volume on these zones. So let's dive into the charts and let me show you how to draw these psychological levels. So the good thing about psychological levels, you can trade them on any forex pair, commodities, whatever. So it depends with what you are trading. So let me illustrate using USDJPY. Okay, so let's start by drawing the psychological levels. So they are normally easily drawn on the higher time frame. So we normally draw them using horizontal line. So let's start with 158.00. So psychological levels are just the same way you use support and resistance, but this one is a bit much more accurate than using a big zone using support and resistance. So the second is 157.00. I hope you're getting how to draw them. The third is 156. The difference between one psychological level to the other is 50 pips. The third is 1. The fourth is 155. I hope you're getting how to draw them. Since I've already drawn them on the charts, let me just switch them on, turn them on, and yeah, so those are the psychological level that I've already drawn. So once you draw them on the higher time frame, you lower down to the lower time frame and see how they are perfectly respected by price. You can see that at this zone it respected this zone, you can see each and every time prices approaching the levels, it tends to react. Like here it reacted. You can see that each and every time market approaches this level, it tends to react from the markets. So psychological levels are not to be traded alone. If you trading them alone, then you are killing yourself. So you have to combine them with the trend. Like you have to understand price action or any incorporative, just using the psychological levels as a confluence to your strategy. So you see, like let's use market structure. You can see that market was in an uptrend here, making higher highs and higher lows, higher highs and higher lows. And here we had a major break of structure. Here we broke structure here to the upside. Okay, after breaking structure to the upside, you can see this break of structure here. We broke structure to the upside. So you could have used like a Fibonacci retracement. Here you could mark from the low to the high there, and you can see that market perfectly reversed at the 50.0 and 61.20, where if you had this psychological level there sitting, and you could have taken that trade. So let me just draw it down to the 4-hour time frame. You can see price this 50.0 and 61.8 Fibonacci retracement zone. So this is the golden zone, and you can see that how price respected that psychological level, and you could have got into that trade and targeted the next psychological level, just getting out with 50 pips. Okay, so we had like another trade here. I normally use it using Fibonacci retracement from the low to the high there, and you can see that price reacted from the 50 and 51 and 50.0 and 61.8 zone, the golden zone, and we had that psychological level sitting there. So you could have used your entry strategic criteria and targeted the next psychological level, because initially we know that the USDJPY is more bullish, is creating bullish structures, so you want to trade with the trend. So you're using the psychological levels to take the bull to ride with the bullish trend here, and you could have gotten some good pips using the psychological levels as your confluence while you are riding the trend. So let me show you a trade that I took here. The last trade I took on USDGPY, actually it was on December. Let me open the trade history there, and I used the psychological level. Though the trade went on a break even, you can see that these were the reason I took this trade. So I saw this break of structure here. We broke structure to the upside there. After that break of structure, I took, let me mark it well there, I took my Fibonacci retracement tool, marked from the low to the high there, and it's not perfect here, there, and you can see that price later came back to the golden zone, the 50.0 and 61.8 zone there, and we had that psychological level sitting around there. And since we are only taking buys on USDGPY, since the trend is bullish, so I lowered down to my lower time frame, and I got into using 15-minute time frame. I got using the 15-minute time frame, and I got into that trade, and I used the I normally trade ICT. So my entry model, I took it there, and my take profit was initially at this next psychological level, but we didn't manage to get there. Since it was on a Friday, and I was holding this trade over the weekend. On Monday, I was taken out at break even, but later market, after clearing out the liquidity below here, it later respected the psychological level, and it went to the next psychological level where I had my take profit, but I didn't take the trade since I trade ICT, so I didn't see my entry model. So I decided, if I don't see my entry model, I normally don't take the trade. So that's how you can use psychological levels. The price tends to reverse around these levels, and if you're following the trend, and you understand market structure, you can use the psychological level as your confluence. That's it, and see you on the next video.